And welcome back, everyone, to another Pivot Podcast. Once again, my name is Tracy. I'm so glad you could join us. And I am joined with my co-host, Mr. Dan Jansen. How are you, sir?
Tracy, good to be back. Episode 1 was explosive. This one, I do not think will be a letdown either. So on this episode of the Pivot Podcast, we're going to dive a little bit deeper with Mike Pickett, one of the listeners of the Pivot Podcast, during our 4-part series of our coaching session that we had with him. And this episode, we're going to dive into a little bit more about taking partials, when to do it, when not to do it, how to build those holding muscles, and how to create a watch list of what to look for when searching in the market.
So let's dive into part 2. We'll see you there.
How long did it take you guys to get over the mental aspect of it when you first started?
That's a good question. Do you want to do that one first, Tracy?
Yeah, I'm still going over it. It's something, you know what? I think it took me probably 2 years of going through a whole bunch of stuff before the emotional part of it stopped having a negative effect on my trading. Okay. Now, that doesn't mean that I don't have moments where it still steps in and it gives me a negative day, perhaps, or gives me a bad experience in the market. But I have better days. I have more better days than I have bad days, if that makes sense. I don't think that we all get to a place where we no longer struggle with the psychological components. I think that it's a daily progression, just as a person, as a human, because there's not just trading that's involved. There's also the other aspects of your life that also can dwindle into your trading. So, you know, if you have an argument with your spouse, for example, and then you decide to trade, you're emotionally compromised, and that could have a negative impact on your trading that allows all that fear and all of that other stuff to start settling back in, because there's other components that are at play. Does that make sense?
Yeah.
Yeah. So, but I think that there was a moment for me, and that moment was actually watching a movie, and I saw this person talking to another individual in the movie, and they were talking about winning a game, and it had something, I can't even remember the exact criteria that, or the context that it was in, but the comment was something along the lines of you're playing not to lose. You need to get out there and play to win. And that whole statement just hit me like a ton of bricks. And it was that very moment that all of a sudden my fear changed. And it was that moment that I realized that, okay, I have been doing that. I've been trading not to lose. So I was very good at protecting my capital. I was very good at losing small, but I could never get those runners. I could never hang on to it long enough, because I would do just that. As soon as I would get into a profit, I would move my stop. I would protect my gains. And instead of playing to win, I was playing not to lose. And that's where I started focusing more on what is actually going to make this trade fail. Where's the stop need to be? And start being more deliberate about where I place my stops, because that's the defense part of trading. Your offense part is the setup and doing the trade management and letting a winner run, right? And if you're not letting your winners run, that's where that fear starts to step in, and you're over defending. You're getting fouls all the time because you're stepping in where you shouldn't be stepping in.
So when you say let the winners run, you're not talking about moving the target because you're getting close to it and you just want a bigger win out of it. You're saying take the win at the 2.4 or whatever you set in your plan, be happy with it. I keep feeling, because I hear these people that hit 5 R's or something, and I'm like, wow, that sounds fantastic. How do you do that without, if you're following a 2.4, they must not be following that, or they're moving their target. And I'm thinking, am I greedy or do I feel greedy because I want to do the same thing? But
so let's talk about that for a second. There's a couple of things It's really hard to get big long runners if you're not taking partials. So unless you're playing with a large enough account and you're actually taking partials. I mean, there was a time when I was playing with a small enough R that I would buy 4 shares on a day trade with Tesla, and I would sell 1 share at my target, and then I would sell another share at the next target and another share. So I'm selling 25% at each time, but that's the way that I was able to allow it to continue running, right? That's my opinion. I don't know, Dan, do you think something different?
Yeah, so I mean, a valid point. What I would say is it also depends on where you are for the month or the year or your career, right? So if your plan to get into a trade is 2.4 hours, which is fine, and it starts running and it's getting closer, you're able to move your stops. To me, it doesn't really make sense to move your targets personally, because you're still just starting out your career, where if it could get to a 2.2, 2.3, just misses you, and then starts to rotate down, you still have your stop for you in this trade slightly above break even, possibly, whatever the case, just based on how you said you're moving your stops. But it might not hit 2.4, right? And now you're letting it come all the way back down. Or it could be that one that runs and could be a 5-hour trade. I don't care about missing out on the upside trade of the trade. So I'll leave 2.5 hours on the table if it was a 5-hour runner. I just did it today on Roblox, right? My plan was I'm going to be in this day trade. I'm going to get a 1.2. If that hits, no matter what happens after that point, I'm locking my profits in. So I'm just taking it. And looking at the chart now, it looks like it would have been a 6-hour, 7-hour trade. So whatever. I did what my plan says. So that's my job as a trader. And you asked about how do you get comfortable about the fear? So two things that really, really hit me. One is just me being me. So I started my trading with $5,000. Like, I didn't come in with $50,000, $100,000, $25,000. I came in with $5,000, and I had the same mindset. And it could be anybody. I mean, if you start with $1,000, you start with 25,000. Whatever the case is that you're comfortable putting into the market, my thought on it was, all right, I really don't want to lose $5,000 in the market, because then I have to, at that point, either keep saving, find out where I can get some more money from. Like, bills were tight, money was tight, debt was high, everything. So I was trading on if I lose that $5,000, and I would take trades, and it was a struggle. It was an absolute struggle until I really kind of sat back and I was like, why is $5,000 so important to me? Right? I asked you for your account. If you lose that entire account, how much does your life change? You said 0%. No way does it really change. And the main thing that's giving you the fear of blowing up the account is just so that you don't have to put more money into it. But if I was to tell you in 5 years from now or 10 years from now, by you doing what you're doing and just progressing, that account will be $100,000, right? Who knows? But that account's $100,000. Would that make sense to refund that account an extra $1,000 if you blow up your account trying? Yeah, you're in for $2,000 and you're sitting in 5 years at $100,000, right? Would it make sense to put $20,000 into the account? Yeah, you're still up an extra $80,000. That mindset for me changed a lot, because I was getting too caught up on losing $5,000 for me, where it was affecting my trades. And the minute I said, worst case scenario, will I still be able to eat? Will I still be able to have clothes? Do I have a place to live? Do I have enough money to pay the bills, take care of the people I got to take care of? If I have that $5,000 or not? And the answer was yes, ultimately, right? So then it was like, okay, I'm going to just trade my plan, forget about the dollar amount completely, just trade the plan. The system that I back traded that was working, just stick to that when the market's open. How I move my stops in the back trade is how I move my stops in real time. And just following the plan, you build confidence in that plan. And that will help you also to take away some of that fear. The other thing, one of the moderators of Real Life Trading, I heard on the mic one time, I think Brad used to say it all the time, but he said, as a trader, your entire job of trading is not to win the trade, but it's not to lose the R. So
if I'm able to move my stop slightly to a half R risk instead of a full R, and I'm letting those trades just run, do their thing, even if it comes back, I get stopped out, I'm still losing half an R on that trade. But I did my job as a trader. I set up my trade based off of the charts, the sentiment, my plan, the back trading. Everything looks good. 10 out of 10 times, I'm going to take that trade. Maybe it only works 50% of the time. It's possible. I can't control the market after. The only thing I can control is my entries, my stops, and my targets. So understanding that your job is done, because now if you lose half an R, all right, next trade you take, you could get a 1.2. You don't have to go for 2.4 Rs. You can try to just get a 1.2, because out of two trades, one worked, the other one you lost half R on. Now all of a sudden you're positive 0.7 Rs out of the two trades. So moving your stops just a little bit makes it so much easier in a long term to be profitable. So I would say that. I forgot the initial question, but I just go off on tangents. It's my thing. But yeah, that's how I got over the fear for me, is just consistently seeing that the plan works. Anytime I add my own emotion to that plan or to that trade, I'm straying away from the back testing that I did, and that kind of nullifies the entire reason why I back traded in the first place. Right. So all the hours, 10 hours a week when I was starting, I'll still back trade about 2 hours a week now. All of that is out the door, a waste of my time if I'm not going to actively do in the market what my back trading was. Right. So just doing that and seeing like, okay, even if I take a loss, my account's not blown up. All right. I'm only risking my R is 1% of my account, less than 1% of my account. I'm going to take losses. I understand I'm going to lose. Everybody loses in trading. I've not met a person yet. Tracy's close though, who just consistently wins every time. Tracy's a 99% win ratio. It's unbelievable.
Not even close. Not even close. So, Mike, now what I'd like you to do over the next little while is build a watch list, and you're a swing trader. So what I would encourage you to do is pick the stocks that you use. So pick the stocks that you like and that you use. You're familiar with them. So if you have an Apple iPhone, have Apple on your list. If you have a Netflix account, have Netflix on your list. So just build your watch list based off of that, right? Then I want you to kind of fine tune your trading plan. Throw in a commitment in there. Now, you're not going to actually start the commitment part until you're done back trading it. Next thing you're going to do is fine tune your setup. So be very specific about what you're looking for and create some rules around that. So
you mean like hammer candles at the 10 EMA or something like that specific?
Yeah, whatever it might be. Yep, absolutely. So, and just enough, I started laughing when Dan said, to have 3 different setups. You can trade the hammer candle, or you can trade the double bottom, or you can trade the engulfing candle. Dan, you never took my candle math class, did you? They're all double bottoms, by the way.
They're all double bottoms.
Sorry, they're all hammer candles, all of them. So
yeah, I know. I've seen it, but I'm not as creative as you. Like, you're blending candles out there like Rain Man in the market. So I can only go with what I see. I can only go with what I see.
That's why I started to giggle, because I'm thinking, that's all. They're all hammers. So just trade a hammer. I love hammers. Yeah.
And the other thing too. So again, it comes down to patience in the market, Mike. So if you're trading and you're saying, cool, I want to trade hammers, have a certain location as to where you want that hammer as well. So it's almost like a twofold thing, because the market will put in hammers during random parts of the day or daily candles if you're swing trading, things like that. But if you're getting that setup that you like at a certain location based on some kind of support, something like that, that's going to be typically a much stronger candle. So now you might be able to, I think you said you're winning about 40% of the chance. Even if that takes you to a 45% win ratio, your profit and loss statement at the end of the year looks a lot different, right? So just being patient, not just seeing like every little hammer that comes in, that's the one I'm going to take, but have a reason as to, in this location, you could go into a bunch of stocks, set an alert. This way, if you were working or whatever the case, if the stock comes down to that area of interest for you, cool, you get notified, you get an alert, you can check out the charts, and then you're just waiting for your setup to come in, because location is very important. There's a reason why hammers are good. Like, there's good bullish sentiment or if it's an inverse hammer, bear sentiment behind it. But location as to where they actually develop is very extremely important. And some people, I had a guy that he took one of Jeremy's videos, and Jeremy was talking about hammers. And I go to his house, and he's like, "Oh, hammer right there, hammer right there." He's taking everything. And I was like, "Slow down. You got your entire lifetime to make money. Wait for your opportunity. Wait for the hammers that you see the best fit based off of some kind of prior support or resistance or something like that." But have in your plan that Tracy's talking about, have a very detailed setup that you like. It can be very specific. And if you don't get that many trades in, who cares? You're just waiting for your shot.
Do you always recommend that you have the target stop on any swing trade, or as long as you just have your bottom stop and let it run if it wants to run?
I always have a target because I otherwise I don't have a plan on my trade, right? So if I'm taking, you're saying I can set up my entry, my stop. I know where I'm risking my R, but I have zero idea where my target is going to be because I didn't set one prior to the trade. So if I don't have a target in mind, then it becomes I have to rely on emotion to make the trade. So it comes down to like, okay, it feels like I should get out now, or feels like I could keep staying, or I think it could keep running. Where in my and that's how I'll set up trades too, especially if you're swing trading. You have unlimited time. I mean, the market's closed. You could set up swing trades. So you have enough time to put in your stop, your entry. If you're shooting for 2.4, you know where that 2.4 is. I also look at how realistic that 2.4 is, right? If I see major resistance before that 2.4 comes in, like major, like this is going to be a tough spot to break, then I won't take that trade. Even though like the entry looks good, the candle might look good. But if realistically there's a lot of resistance in the way for me to get to my target, chances are some of that's going to play in. The trade might take longer. You might have weird wick out candles, things like that. I'm looking for something that like, yes, this makes sense that this stock could get back to this price because of that's where it last pivoted. That's the last resistance higher than that 2.4. So all of that I would take into account, but I always have a target in place. And I'll even have, like Tracy said, I'll also have a plan. Before I get triggered on the trade, I might want to take partials. So if I'm looking and it's not like a big major resistance, but I see a couple of the resistance spots along the way, I'll be like, all right, you know what? I'm going to take 10% there. I'll take 10% of that resistance because maybe that resistance is stronger than I think, and we do get a bigger pullback. But again, what Brad said on the mic is my job as a trader is not to take winning trades. It's to just not lose an R. So if we get up to that first resistance and I take 10%, even if I leave my stop exactly where it is, can I lose an R? No, I've reduced my risk on that trade by taking a 10% partial. So I'll have certain areas, and I usually base that off of previous other resistance that I could see like we're kind of stalled out a little bit or had some issues getting through. Because usually once you get up to that zone, typically you run into a little bit of that resistance. Whether that's enough resistance to knock it right back down and knock you out, it's possible. But you're taking the trade because there's a much stronger resistance way above your target on that stock.
Yeah. So here, I just want to add to what Dan's saying here. So here's some of the problems as well when you don't have your target in mind, when you don't think about the target and you don't have it planned out. I know a lot of traders, and I've seen it regularly, where they hit it. They hit the right trade. They got a great entry and they didn't have a plan, and things start to run. And then the infamous pullback starts to happen. And then all of a sudden that emotion, as Dan was saying, kicks in, and the fear starts to kick in. Oh no, I missed my opportunity to get out, right? They think the market's turning around on me now. So then they start to not have a plan. They start to panic, going, well, what do I do? What do I do? Well, I'll just wait till it gets back up. I'll wait till it gets back up and then I'll sell it again. And then they start negotiating with themselves about, well, come on, just go back up and then I'll sell it again because I didn't have a plan. And then it just continues to plummet. Meanwhile, they're not getting out either. They're not getting in, and then everything just starts to become an issue. So here they hit it big. The trade was right, but because they didn't really plan out a target, they didn't have a solid, complete plan. It's like saying, I'm going to get in the car and I'm going to drive, and you just leave your province or your state, and then that's it. It's like, okay, now what? Where am I going? And you don't really know. So what happens from there? You're kind of just sitting in limbo, and it's not a good situation. And when you try to do that with emotions, you end up giving all of it back, and that's what ends up happening. A lot of times it just rolls over and stops you out because you start negotiating and telling yourself you'll do this if it does it again, because you say, I made a mistake, I should have got out there. And do you understand what I'm saying?
I do.
Yeah.
So when you set your target and say I'm using the 2.4 and it gets to around the 1.6, 1.7, something like that, and you just see it just kind of staying there and not moving, is it okay to break the plan at that point and just go ahead and get out? Or do you just stick to your plan no matter what, except maybe move your 1 hour up to the half hour or even to your entry point?
Good question. So for me personally, I would not break the plan ever, unless which it's a little tougher for beginners, I think, to see is the traps in the market. So there's like bull traps, bear traps, things like that. If I see a noticeable trap, which basically means we had a good breakout candle above that, and then it just pretty much shot right back down and closed back into that resistance, which would actually create an inverse hammer typically. But there's usually high volume on that candle, something like that. That would typically be, for me, at least some cause of concern where I might move my stop up right above that resistance or some case like that, or take a partial there, maybe that I have to. But for the most part, when something trades sideways, it doesn't mean the trade's not working. It's just consolidating. So typically the longer something consolidates too, and those are the most frustrating times to hold through trades, because you're like, just go already, just go in your direction. But it's just, you have a lot of bears and bulls fighting, and it typically breaks one way from there, which could be up, it could be down. You don't really know, but usually once you get that break, you get a rapid move, because anybody that was, let's say it breaks to the bullish side, starts going up. You typically have all of the bears that were trying to shorten there during that fight. They're now like, okay, I'm wrong. And now you have a bigger move because now they're buying back their shares on the short to help also increase that. Plus, if you're trading, if you're a day trader, swing trader, you see that consolidation, you typically could just put your entries right above that consolidation and your stops below it. So this way, if it does break up, you're catching the momentum on the way up. So like, you're also triggering a spot where a lot of newer traders might come into that trade as well. So I really don't want to get out of that trade personally for me. But, and again, even with the bull trap and stuff like that, that's in my plan as to when I could do that. So I still follow the plan. But yeah, I wouldn't aggressively just exit out of plans or trades if that's not your plan.
So you could logically have a different plan for every single ticker that you back traded to.
You could. I don't think some stocks will have its own personality and trade separately, but for me, like, I have one trading plan. I don't have a plan for each stock. Tracy, I'm not sure if you do, but I don't. So my plan just encompasses the system that I'm using as to when I could get in, when I can move my stops, and when I could take an aggressive stop move out. So I'm looking for specific types of setups. Typically, I trade a lot of reversals, but gaps as well. Both of those are probably my two favorite setups. And then from there, I'm just executing my plan on any stock that would fit that certain criteria. So you could get as detailed as you want. The problem is, like we said, I don't know how many stocks are in the market. If you literally had a plan for every single stock, specific plan, you're going to get very confused as to which stock plan you're trading, and it's just going to become more of a nightmare. I think especially coming into the market, stocks don't move that differently, but like if you're noticing something, like for instance, AMD, a lot of the traders in the group, like we'll trade AMD a lot. It's one of Jeremy's favorite stocks. We've noticed, we've applied our setups to AMD, and we'll get triggered in, and it does like one last move typically, right? Like we're at a good spot, everything looks good, and for some reason on AMD, it always does like one last move, and then it works. So we know for that one, okay, we see a good setup. Let's be patient. Let's see if we get that one more drop. And if it just shoots up from there, we missed the trade altogether. We missed a trade. But we found out just in particular that stock, for whatever reason, has a little bit of a personality where we were like, okay, we're taking a trade, we lost. Take a trade, lost. And we look at the setups. 15 minutes after the loss, they would have been great wins, but it did one more dip. So some stocks will do that, but a lot of times the stock will fall kind of under the same umbrella.
Do you have in your plan an exit time period?
Mm-hmm.
Okay.
Yep. So I'm going to touch on your last question as well. So for me, during a consolidation, so again, I'm with Dan. I won't break my plan, but what is in my plan is very simple, and it plays into a little bit with the time of day. But if I get a consolidation that's happening at a resistance level, if I'm long, for example, it needs to be at a resistance level. If it's just happening for whatever reason, I ignore it, and whatever happens, happens. But if it's at a resistance level, a strong one that I've defined, then what's in my plan is, instead of my next target being just a partial, it most likely will end up being a take all target if I am at the end of the day. So I exit all my trades by 3:30. That's what I do. But anything after lunch, I will typically start to, instead of taking a partial, I will take all when it hits that target and lock it in. Specifically, if I've got a consolidation at a resistance level, then that becomes a take all target.
And what's your time frame on a swing trade?
For a swing trade, I just let it run. Okay. I let it run and I follow my plan, and I'm out of it when I'm out of it. So the only time that I actually have a time frame on it is if it's absolutely doing nothing. So, and I find something else that I want to get in. That's the only time that, if I've been in it longer than, a week, and it hasn't done anything, and I see another setup that I want to enter and I need the buying power, then I will exit that trade and I will get into a new one.
For me, it's if I'm in a swing trade, I really only want to be in that swing trade for about 2 weeks. Just typically, I find that the longer I'm in a swing trade, and it's like, if it's like kind of flatlining and you're just not really doing anything, then I'll just kind of exit with a small loss, small win, whatever the case on 2 weeks. Because for me, I'd rather just say, okay, there's plenty of other stocks out there that have potential to move. So for me, it just made sense. Mm-hmm. The other thing too, with small accounts, the one thing I would say, if you are, because you kind of have a hurdle where you want to make money, and not just on swing trades, but for people that work and maybe don't have access to be in front of the computer the entire time. But it sounds like you do have the availability to at least check the stocks. I think most people at some point, I've seen people work in an office, and the amount of work that actually gets done, they have plenty of free time to check the computers a lot of times. But if you take swing trades off of a 4-hour chart or a 1-hour chart, right? So maybe if you're doing a daily swing trade chart now, look for a 4-hour chart, because you do want to build your money as quick as you possibly can in the market on trades. If you're taking daily candles on a swing trade, you might be in it for 2 weeks. Some people's plan, you might be in it for a month, depending on how long you want to be in it. But you do want to build the account as quick as possible, and just either it's okay to lose. So if the trade is not going to work and you get stopped out for an hour, cool. I lost an hour on the trade, but it's a shorter amount of time, and now I'm able to find another swing trade on that same time frame, hourly or 4-hour, because now you're able to get in and out a little bit sooner. So instead of waiting 2 weeks to find out you lost or won, maybe you're in there for 3-4 days, right? And now you're able to take a little bit more trades as far as when you see things that fit the account. Because if you have, let's say, $1,000 in the account, sometimes it could be tough to take 2-3 different trade setups. You might have to focus on one trade or two trades, or whatever the case for the $1,000, depending obviously what the R is and how much margin you might have. And then you also have, day trading is a little tougher with anything, at least in the US, where if you have under 25,000, you have the PDT rule, so pattern day trade rule. So if you're day trading, that only gives you 3 trades that you're allowed to take within a 5-day rolling period. So those ones you have to be very specific. So anything really under 25,000, for me, it's like a happy medium where I could day trade, but where I'm able to take trades during the day, but I don't necessarily have to sell them that day. So I just have my stops in, my entries, everything. But if I'm trading off an hourly chart or 4-hour chart, typically I have a little bit tighter of a setup. Things for me could hit targets a little bit quicker. I could hit the 2.4 or whatever, 2 Rs, or whatever my target might be on that trade, just a little bit sooner as well.
All right, and that concludes part 2 of our coaching session with Mike. It was an amazing session. What are your thoughts there, Dan?
Absolutely incredible. I mean, the information that we get each and every time we talk to any traders, especially going through the coaching sessions, helps me each and every time, and I think it should help all you guys listening to the Pivot Podcast as well. I would say definitely if you missed the first episode of this 4-part series, go back onto reallifetrading.com, scroll all the way to the bottom, you can see a link for the RLT Pivot Podcast. You guys could review that full episode. Plus, in the beginning of the episode, we do have rules for a contest that we put out this month. So you guys can check out the rules. We would love for you guys to participate. And by participating, number one, you get a chance to win. But two, I think for each of you guys, it will help just make you more consistent, profitable traders by following this step-by-step process that we're putting in for the competition as well. So we'd love for you guys to join there. Tracy, always a pleasure co-hosting with you. And to each of you guys listening each and every week to the Pivot Podcast, we appreciate and love all you guys. We'll see you guys on the next episode.